You are here with Neil and Ananya Talk Time at CEWR, and we have our guest Shane from Mortgage Center, also known as Your Mortgage Your Way. So, welcome, Shane, to the studio.
Good to be here.
Shane, tell me a little bit about the current mortgage market.
Well, the current mortgage market, the Bank of Canada recently raised interest rates last week by 0.25%. That in turn which is causing most people's, if they're in a variable rate mortgage, their mortgage payments are going to go up. There also has to be with the Bank of Canada's recent rate announcement, the qualifying rate will also be going up most likely in the next couple of weeks. So
Wow.
I know, so major changes about affordability, and if people are in the market to buy a house, just be aware that their qualification numbers could be going down.
Well, that's interesting.
So what type of financing do you do, Shane?
I'm a mortgage broker.
Okay.
Part of Your Mortgage Your Way.
Yes. So, how long your company is in the mortgage financing business? Do you do
We
second mortgages as well?
Yeah, so we've been in the market for 4 years, and we do first mortgages, second mortgages, private mortgages, and private lending as well. So we do a mix of everything.
Mm-hmm. Oh, that's wonderful. So, what types of financing do you do?
If it's residential and commercial, so we do both. So if it's most people who are looking at buying a property, rentals. If you're looking at buying a rental unit, buying a unit that has a rental or an income generating suite, we do all of those.
Wonderful.
And you said the qualification is going to be tighter. So, how do you qualify with your company? Like, how can one say that coming to you was a benefit?
Right. So since we're mortgage brokers, we work with over 32 different lenders. So we have the ability of working with 32 different lenders. So instead of you going to, or the average person just going over to their one bank, they say no, going to another institution, we have 32 lenders at our disposal. So we do one credit check, and we can tell you where we can place your mortgage.
What's your clientele like, so that people have an understanding?
We have first-time home buyers. We have people who are buying an investment property. We have people who are looking at buying a commercial unit. So our cottage, if you want to buy a cottage, we've got people who are just looking at buying a large number of different properties. So if you want to buy your first place, that's great. If you want to move up and then buy more properties, it's definitely an option. So most of our clientele are repeat clients, and they keep their homes and they try expanding their property growth.
Where and how do people contact you?
So you can go on our website, www.YourMortgageYourWay.ca, and you can even give us a call at 416-640-0930 at any time. And if we are not available, you can leave a message. But for the most part, we have a receptionist.ca.
That's a very cool name, though.
Your mortgage, your way, right?
It's
Yeah.
your way, right?
It's
So
your
you're in control.
So, listeners who are listening to this radio show, please contact a number.
Yes.
Because remember, the most important investment in your life is a home investment.
Biggest
Biggest
investment.
investment. And to get the mortgage right is very crucial.
Exactly.
Especially what Shani is telling us, that things are going to get even tougher.
Yes,
Right?
so buy your house whichever you want to before those interest rate goes higher.
The qualification rates will most likely be going up in the next couple of weeks. So just be warned, if you do have a pre-approval in place, or if you are looking at buying a place, make sure you do it sooner.
So what about the qualification?
So when we're looking at qualifying for a mortgage, we have to do a stress test.
Yes.
So it's not you need an Advil because you're stressed, but it's it's the mortgage stress test that makes that the Bank of Canada has in place, where we need to make sure that if rates go up, people can qualify for the mortgage. So that's 2% over the standard contract rate. So now, as people are aware that fixed rates have been going up, so right now on average it might be anywhere from 3.34 to 3.79. So if you're looking to get that mortgage, a fixed rate mortgage, we have to qualify you on 2 percentage points higher. So we're qualifying you on 5.34 or 5.74.
Oh, okay.
So that's why this stress test is what's affecting most people's buying power and purchasing power. It's reduced by 20%.
Wow.
After they introduced the new rules in January. So people are being affected by it, and as rates slowly start creeping up, that's on the fixed side. On the variable side, we just qualify you on the Bank of Canada's posted rate, which is 5.34 right now. Which means if they
That's
do,
pretty high.
it's still pretty high, but it's still lower than a fixed rate. So it's weird how the Bank of Canada is making it easier for people to qualify for a variable rate mortgage.
You should be happy. What are you talking about? It's weird.
You should, right? Well, because some people are just get anxious, right? They're like, oh my God, I'm in a fixed rate mortgage, but you have to be. There are different penalties if you go into a fixed rate or into a variable. Me, I'm a variable guy. I always like having a strategy if you're in a variable rate mortgage as opposed to being in a fixed. But again, it all depends on who you are. So, if we have a conversation and if you're the type of person who will get anxious about rising interest rates and because the Bank of Canada meets 8 times during the year, and during those times you're going to be stressed out or you're losing sleep, then maybe a variable rate mortgage is not meant for you. I strongly believe that if we can take out the stresses in our life to make it easier. But again, this is a qualified risk when you go into a variable rate mortgage. It's you're thinking about it. You're not just you're buying an expensive car or you're buying expensive jewelry, which is nice. But who doesn't like that?
Okay, he's just trying to correct because I'm a lady sitting in front of him. He doesn't want to go that route.
But no, you should. But you know what? If you're going to get into debt, and that's not the right type of debt to get into. No, of course not. Right? So that's why. So variable rate mortgages could be good for some people, and fixed rate mortgages could be there for some people. It could be good.
That's true. Tell us what would be your message tonight to our listeners for mortgage and whoever is looking to buy, whether an investment property or a home or something just for leisure.
The main important thing is you just have to learn how to make a plan. Mm-hmm. So without a plan, you can't move forward and strategize. So make a plan of what you want to do and what you want to be in 2 years, in 5 years, in 10 years. So if buying a home right now is not possible, then at least plan for it. If you need to fix your credit, just plan for it. But the first step that you need to do is speak to a professional. And once you do that, we can at least help guide you in making it work. So if you want to keep your home and buy a condo for your children in the next 5 or 10 or 15 years, you can start doing it now. Because with the rate at the rate that housing prices are going, or at least the condo prices, it's going to be impossible for the next generation to afford anything. So make a plan.
That's not a good news.
Thank you. I bring good news all around.
Yeah, I see that.
But the good news is it can work as long as you make a plan and just give us a call. YourMortgageYourWay.ca, and give us a call at 416-640-0930.
So that number will be 416-640-0930 and Your Mortgage Your Way. You are also present in Facebook.
Yes.
I have seen your Facebook
we're
page.
heavily present on Facebook, LinkedIn, Twitter. You can just follow us.
Yes, amazing. So another thing is, now that we are planning to, it's summertime. Most of the homes the market is going slowly up, as I hear from the news. I'm not sure how far it is true.
It's depending on neighborhoods. Certain neighborhoods are not even affected. And I think the city of Toronto, if you're in the city of Toronto, most people are not affected by the rules. You can still find people who are, their offers are going in multiple still.
Wow. So what about people who don't live in Toronto? Like me.
Okay. And you live very far away, right?
Very far away.
Very far.
Mississauga.
Mississauga. Oh my God.
Come on, it took me 1.5 hours.
And I was telling you, it took me such a long time to get here.
Yeah,
right?
he was just rubbing it in,
It took me like a whole 10 minutes.
See?
Yeah, I know.
Right.
See?
You came all the way from the U.S., it seems like.
I know.
Mississauga is almost in the U.S. border.
Clearly, right? You might as well just move to Trumpland.
Oh my God. Why? What have I ever done to you? You're telling me this.
Okay, so your question was, for people who are living in the suburbs, what was
Effect, yeah.
how are they affected?
How are they gonna?
Okay, how they are affected in terms of real estate is that if you're trying to sell your home, it's going to take a lot longer to sell your home. That means it's a buyer's market,
Yes.
which means that if you're a buyer and your affordability is, at let's just say 500,000, most people who are trying to sell, I mean, you've got more bang for your buck. You can actually go in with a slightly aggressive offer, and because homes are not just selling in 2 or 3 days anymore, you may find that you can get a better purchase. A wise friend told me once, you don't make money when you sell a home. You actually make money when you buy a home. So if you can buy it for a really low price, or at least a price that's good for you, you can make money.
Okay.
I had a situation with a friend of mine. Like you said, location is important, right?
Mm-hmm.
Like he obviously sold his house, the question was prime, but he wanted to buy a house in the same location. So guess what? He could sell his house, but couldn't
Can't afford it.
couldn't
Yeah.
buy another house.
Yeah.
In the same location.
Yeah.
So that was the problem, right? And ultimately, it has to go to private lenders and
Yes, you guys do second mortgages, right?
We do, yeah, we do. We deal with the regular banks. We deal with monoline lenders. We deal with alternate banks, it's not necessarily private lending, where the rates are slightly higher, but they have more flexibility, where they can, look out for people who are self-employed, people who are getting paid cash, and there are options available for people. And then there's private lending as well. Private lending is a tool that we have, but it's only supposed to be a tool for maybe a short period of time, 6
That's
months or
true.
1 year. You don't want to get into a property with the intention of, going only with private lending, because those rates are higher
Yes.
than even the alternate lenders.
Unless you have $1 million.
And then you could buy
Anything.
a car. I was
Come
going by the
on.
song. It was the song.
Yes, I know. So we have also Roy, who says, great music, Ananya, and thanks for the opportunity for the talk show. Thank you, Roy, for bringing Shane to our show. We are just as delighted as you are.
It was really a fun-filled hour with our host Shane, and we got to learn a lot about mortgage.
Yes.
And those who are listening can contact a number, which is
416
Yes.
640 0930.
And your name is Shane.
Shane
Shane
Ferrao
Ferrao.
from Your Mortgage Your Way, and you can always go on our website at www.YourMortgageYourWay.ca.
Excellent.
this was Talk Time at CEWR.
With Neil and Ananya.
It was a pleasure having you, Shane.
Thank you
you.
so
It
much
was fun
for
being here.
coming. And I hope you enjoyed the show.
Oh, I did. And I enjoyed the music as well.